evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue working with the indicator support and resistance. This is going to be third and the final part involving these indicator, where we will look to complete the sell side of the equation. We will see how we can take the advantage of this indicator to design a system in such a way that we will have the optimum conditions for the entry point to go for a higher probability of ending a short sale trade on a profitable note. So let us now head to the Visual JForex platform, which has been developed by the Dukascopy Bank SA. In the last two sessions, I had demonstrated to you how we can get the instrument subscription done, where the Euro USD is being used as the instrument of choice. Afterward, the position amount was defined at zero. I have also added this support and resistance indicator block with the candle period at hourly and the look back period of 2. To look at the price volatility prior to the execution of the trade, we are also relying on the info candles. First two are of hourly candle period and later two are of 10 seconds each. Then we have created these variables to set certain conditions as per our requirement, which I will explain to you or kind of give you a refresher very shortly. And these are the conditions which we have put in place for the execution of the buy trade. This is the trade command block. Now we have to create a mirror image of this. We have to set the conditions for the sale trade. So let us now head to the JForex chart, which I will change to Euro USD, and the time period is of hourly. For any sell trade to execute, we want to rely on the resistance zone. We are taking the advantage of the support and resistance formation, where we look for the sell trade to execute once there has been resistance formation, and we are seeing the price action also respecting that level, and we will be relying on the actual difference between the maximum and the minimum of the resistance and support indicator. We will take actual difference, and then using that difference, we will create certain conditions. So for any sale trade to execute, we want the last hourly candle close to be lower compared to the opening price, and the prior candle, the second last candle, should have closed on the higher side compared to the opening price. So that will be indicative of a reversal of sort on the hourly time frame. And also we are going to put in the condition that the last hour's opening price should be lower than the resistance zone. So that will mean the resistance formation is being respected, and we can expect the price to remain range bound, if not go on declining. So in the scenario where it remains range bound, or if it goes on to decline further, in both the scenarios we stand to profit. But of course, if the reversal happens, in that scenario we will be ending the trade in a loss, and for that we will be taking the risk reward ratio of 1 is to 2. So that will ensure that the losses are a lot less compared to the profit, and as and when we will get the trade right, we will be making the money twice as much as we lose in a loss making trade. And to make sure that the execution happens close to the resistance zone, we will take the actual difference between the resistance maximum and the minimum, and we will take the 25% of that actual difference, and whatever is the actual difference. Suppose for example here we are going to execute the trade, then we will consider the difference, actual difference between the minimum and maximum, and take 25% of it and deduct that 25% difference from the maximum, and that will be our lower limit for the execution of the trade. And the last hour's candle close should happen above that lower limit, and only in that scenario the execution will go through. So let us now look for the execution part. Considering the fact that this is going to be the mirror image of the buy side, we are going to need 6 of these if else blocks, and later on these open at market trade command blocks. So I will get in these logical blocks. Okay, so here we get this. we have to look for the candle 19's closing and opening values. So for that, I will take this auto created variables candle 19, which is the last hourly candle. Candle close needs to be less than the candle open. First input less than second input. Whereas penultimate hourly candle, which is candle 20, it should have its closing value higher compared to the opening price. So candle 20 candle close needs to be greater than candle 20 candle open. First input greater than second input. We also need to ensure that the opening price of the last hourly candle was below the resistance zone. So for that, again, I need to take candle 19 candle close and compare it to the maximum 15. So here again, this needs to be first input, not closing price. Actually, this needs to be opening price. So candle 50, candle 19, candle open. First input less than maximum 15. Okay. First input less than second input. Then candle 19 candle close should have happened within the predefined range. So again, I'm going to need candle 19 candle close, and then it will have to be compared with a predefined variable. So let me check if we have that defined or we need to define it anew. We don't really have it defined, so I will have to define it anew. Alright, so for that I'm going to need calculation expression, and this actual difference multiplied by, or sorry, divided by 4. df, the user's variable, has a value of 4. So I will take this and deduct this variable from maximum. It's going to be, calculation is going to be a1 minus a2. a1 minus a2 is going to be sell lower limit, and we compare it to candle 19 candle close. Candle 19 candle close needs to have been greater than SLL. So first input greater than second input. Alright. Then the execution will happen as and when price starts to drop below the last hour's closing value. So for that, again, we have to take candle 19 candle close and compare it to Closing values of candle 21, candle 22nd. Okay. Candle 21st. Candle close should be less, so first input less than second input. And candle 22nd. Candle close needs to have been greater than the candle 19 candle close. After that, we bring in the open at market block to join it. So first input greater than second input, then it becomes a sale trade. Prior to defining of these parameters for the trade command block, I will arrange these blocks on the lower side, which might take not more than few seconds. Alright, we have joined it to the calculation expression. Now coming to defining of these input parameters. Default instrument remains as it is. Trade amount I will change to 0.1 million. Page 2 pips. Stop loss and take profit will be dependent on actual difference. For that, we had created the variables last time around. 25% of the actual difference is stop loss and twice of it is take profit. So we will take these two variables as it is. Okay. So with this we have just to get it right. So here we have this. Now as you can notice, this is exactly looking like a mirror image of the buy side. So we have a symmetrical formation in place. Alright. And to check whether the trade iteration flow is going till the very end, I will color code it. And as you can notice, the trade iteration flow is uninterrupted till the very end. And with this, the algorithm is complete, and for you to test it, you will need the assistance of the JForex platform. So I will advise strongly that you get the setup completed on your own, and then to look for the proficiency to know whether it is profitable or not in the longer term, you should test it on the historical data for many months or even years if you feel like. And if you do find it profitable, you can use it. So that's it from my side for today's session. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. The JForex platform link has also been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.